Amitava Mukherjee, who is sharing his plans on how to tackle the elevated expenses, and he's pursuing an ambitious capacity expansion to 100 million tons in 5 years. Now, listening to a slice of that conversation first before we take questions.
My first question coming to you is, yes, there has been a miss. Costs have been elevated. The revenues have seen a growth, but that's coming in on the back of good sales in terms of pellets and other minerals. Taking the fourth quarter numbers into consideration, what is in store with regards to FY26?
Well, our guidance has been for this fiscal is around 55 million tons of iron ore sales. That's definitely going to happen. Last year, we had certain problems in terms of our industrial relations. So that is why around 45 days of production we lost. This year, I think that will not be there. So 55 million ton is what our EC capacity is, and 55 million ton is what we expect to do. So going by that, I think we should be able to log a top line of around 30,000 crores this year, which is, if you see from our operations, it was around 23,500 crores this year, but our total income was around 25,000 crores. So we hope to go to more than 30,000 crores this year, riding on higher iron ore production and sales. And also our pellet making, which we have entered into an agreement with KOICL. Last year we did hardly 0.5 million ton. This year we expect to do around 3 million tons, full capacity utilization. So riding on both these things, I think we should be able to do around more than 30,000 crores of top line.
Okay. So what's your outlook in terms of iron ore prices then in terms of FY26?
Well, I'll be happy if they are stable. They have been stable for the last couple of months, and I hope that the stability continues. I do not see a great upswing, neither a great downswing. A plus minus 100, 200 this way or that is what I expect. But I'd be happy if there is a stability in the market. That's good enough for this financial year, considering what is happening internationally and both in terms of steel prices and in terms of iron ore prices. Stability would be a great thing to happen this financial year, and that's what I'm looking forward to.
Okay. And what's your outlook in terms of coking coal prices, given India's projected significant coking coal imports in FY26, right? So is NMDC also actively exploring opportunities to acquire operational coking coal assets?
Oh, yes. You see, we have actually got a list of 10 assets which we would like to acquire even abroad, and of which coking coal is one of the main minerals, because if you see, today we are importing around 65 million tons. Going forward, we will be importing more than 160 million tons. So I think the country needs more coking coal, and that is why NMDC is very actively looking at coking coal assets in Australia, in Indonesia, in other parts of the world, wherever they are available. And coking coal, it does not make too much of a sense to go into exploratory stage assets. So that is why we are more keen on having a participation or a buyout or whatever form of participation that is available for coking coal assets in any of these geographies that I just spoke about.
Okay. So taking these acquisitions into consideration, what's the kind of timeline that you're looking at? And would that mean it would be done within that 4,000 crore kind of a capex that has been planned in FY26? Or is that something more to it?
No, these capex are purely for our domestic investment for capacity building. These are not related to any acquisition abroad. That has to come through a completely separate budget. We are looking at quite a few assets as we speak. They are at various stages of evaluation. We have a very structured evaluation process in terms of, it's a 6-stage, 7-stage. It takes around 6 to 7 months for us to go through the entire due diligence process, whether it is technical due diligence, legal due diligence, financial due diligence. So many of these assets are at various stages of scrutiny, if you may say so.
So Amitava, then what will be that additional capex that you will require in terms of funding these international assets?
It will be very difficult to speculate, because unless you freeze on these assets and then you have a valuation and then you have a final number across the table, it will be very difficult to speculate.
No, so okay, how much money are you going to keep aside? How much money are you going to keep aside for this?
We can generate the money that we would be requiring. I don't think the equity portion would be very great in any of these. The equity portion which we need to fund from our sources would not be great. But yes, we need to sort of have a lot of debt component in these assets